The real estate market in 2026 is in a strange position. Prices are no longer exploding like they did during the pandemic years. But affordability is still difficult in many regions because mortgage rates remain relatively high. Buyers are asking the same question everywhere. Should you buy now or wait for prices and rates to improve? Today we will talk about real estate in 2026. Buy now or wait. So, before we start, make sure to leave a like and subscribe to my channel. 10. Mortgage rates are still the biggest factor. Mortgage rates are still controlling the housing market in 2026. Even though rates are lower than their peak levels from previous years, borrowing money is still expensive compared to the ultra-low rate era. Higher rates increase monthly payments significantly, which makes homes feel less affordable even if prices stop rising. This is why many buyers are hesitating. At the same time, experts expect rates to slowly improve if inflation continues cooling, but uncertainty in the global economy could delay that process. 9. Home prices are no longer rising rapidly. One major change in 2026 is that home prices are no longer increasing at the extreme pace seen during the pandemic years. In many markets, prices are stabilizing, growing slowly or even declining slightly. This creates a more balanced market where buyers finally have more negotiating power. However, limited housing supply is still preventing major price crashes in most areas. 8. Rental demand is staying strong. Because buying homes has become more expensive, many people are staying in the rental market longer. This keeps rental demand strong in many cities and regions. For investors, this is important because strong rental demand can improve rental income and cash flow. In some areas, rents are rising faster than property prices, making rental properties more attractive than they were a few years ago. 7. Some markets are performing better than others. The real estate market in 2026 is highly regional. Some cities are growing strongly because of population growth, job opportunities, and affordability, while others are slowing down due to high living costs and weaker demand. This means national headlines do not tell the full story anymore. The local market matters far more than broad market trends. 6. Rental yield matters more now. Investors in 2026 are focusing more on rental yield instead of only hoping property prices rise quickly. During the low interest rate years, many investors relied mainly on appreciation. But now, cash flow has become much more important because financing costs are higher. Properties that generate stable rental income are becoming more attractive than speculative investments. 5. Waiting for a massive crash may not work. Many buyers are waiting for a huge housing crash, but the current market is very different from 2008. Housing supply is still limited in many regions. Lending standards are stricter, and many homeowners already locked in low mortgage rates years ago. This reduces pressure for forced selling. Prices may soften in some areas, but a nationwide collapse is far less certain than many people expect. 4. Buyers finally have more negotiation power. One advantage for buyers in 2026 is that competition is less aggressive compared to previous years. Homes are staying on the market longer in many regions, sellers are becoming more flexible, and price reductions are more common. This gives financially stable buyers a better chance to negotiate instead of rushing into bidding wars. 3. Real estate is becoming more selective. In 2026, simply buying any property is no longer enough. Some areas and property types are performing much better than others. Investors now need to focus carefully on location, rental demand, long-term population growth, and affordability. Smart property selection matters much more than it did during fast-rising markets. 2. Buy if your financial situation is stable. The smartest reason to buy property is not because people online say the market is hot or because everyone else is buying. The best time to buy is when your personal financial situation is strong enough to handle the responsibility comfortably. Real estate should create long-term stability, not constant financial pressure. If you have stable income, emergency savings, manageable debt, and monthly payments that fit comfortably within your budget, buying a home in 2026 can still make sense even with higher mortgage rates. A stable financial foundation gives you flexibility and reduces stress during uncertain market conditions. 1. The Real Truth 2026 is a selective opportunity market. The biggest truth about real estate in 2026 is simple. This is not a perfect buyer market or a perfect seller market. It is a selective opportunity market. Some regions offer strong rental demand, stable pricing, and better negotiation opportunities, while others remain overpriced and difficult to afford. The smartest approach is not trying to perfectly predict the market, but focusing on long-term value, sustainable payments, and buying only when the numbers truly make sense. What do you think about our video? Let me know in the comments below. Before you go, leave a like and subscribe to my channel. Thanks for watching.